A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credifi testnet is live, so head on over to demo.credifi.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and module.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a minute past midday, making it a minute past 1100 UTC. Big shout out to everybody joining us live today. See loads of you lining up in the chat, which is awesome to see. And also a big shout out to everybody that's watching this on recording. So I want to kind of really focus on a macro view today. All right, guys. So I think with everything that's been happening recently, you know, a lot of people kind of reaching out on Twitter, obviously, to us around the Nest and that as well. We obviously, over at the Nest, we've kind of been prepared for this for a little while. But I want to really run through with you guys the reasoning as to why, you know, it's all well and good coming in here and, you know, showing the executions, trade plans, setups and bits and pieces. But actually, without a real kind of macro view, you're always very, very exposed to these markets. All right, guys. So I'm going to just kind of load this up here now. Going to keep the range on the chart, and then we're just going to get rid of these for a little bit so that we've got something nice and clean. And I want to kind of focus on what our thought process was last week going into this, why it was that way, and then what we can do to kind of look at this moving forward. So please do let me know, ladies and gents, if you can hear me okay and if you can see everything okay. If that is the case, then we will absolutely crack on. So weekly range here as well, kind of more of a daily range really, which we're going to dive into. Let me just move this out of the way quickly. Just want to leave that there because this was a really big part of our kind of analysis the last few weeks, and this will kind of become a little bit clearer as we go on to a daily. Now, I know obviously that there's quite a lot of, you know, FUD in the market at the moment. We've had this big sell-off. It is something we've kind of been anticipating for a little while in terms of the markets calling off. It can be a lot more difficult to kind of finalize or kind of commit to these things sometimes with crypto. And I'll tell you as for why, because, you know, as we've seen by previous runs, you know, examples like these, for example, sell-offs like these as well. Perfect. Thank you, Raphael, my friend. Is that it's all good. We can see the charts and hear you. Brilliant. And it's a double win, Gio. Then, you know, crypto doesn't always have to, you know, be as efficient as we want it to be, right? So coming from kind of more of a traditional market background, I personally looking for price in the way that it kind of seeks liquidity above old highs, below old lows, and then also within inefficiencies, right, which are our fair value gap. So let me just draw this in here for a minute as well, which is our weekly gap. Now, this is really, really important, okay? So I'm just going to pull this back for a second. Again, we're going to look at this on the daily. Quite simply, on a weekly basis, we had this impulse move. We set a clear low. This kind of set our range, right? We can see the price typically when it's ranging. You have the lower half, the upper half here as well. You would split them on a lower time frame, and you watch price kind of move level to level, okay? Now, I think obviously we've had a really, really big move, displaced below this low here of the range. And as we can see, that's the first close below this low. We set that back in March, yeah, and then support, 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 support. Huge bastion of support this level, even supported it again here, noticing how price kind of came down, then came and closed back within the range. Now we've had this big sell-off here, right? So, you know, that's undeniable. There's a lot of volume to the downside within that move. Look at the bodies in the candles. The great legend himself, SC, always said, you know, look at the wicks. The wicks are where prices tried to get to. Price tried to get below the lows here, tried to get below the lows here, but ultimately it didn't. The body really tells you the story of the battle, okay? So on a weekly scale, the key thing that I'm focused on here is this weekly fair value gap. All right. Price continues to hold this. This is a low set within a fair value gap, making it basically a double liquidity pool, meaning that running this, we do expect some kind of reaction. Now, before we move to the daily, moving this line back across here, the reason for this is I wanted to see how price reacted underneath it. Much more of a stronger close than this, and I would have really been favoring more downside pretty much straight off the bat. But in fairness, it kind of recovered a little bit, but we have closed below this level here. So we need to kind of look at this as a key kind of pivot point. Now we're going to get a lot more information here on the daily, and we can really see how this kind of midline of this range has been so key. Yeah. So, again, if you want to do this, you can just grab your Fibonacci here. I'm just going to move this one out so that we've got a range that allows us these kind of midlines here. Now, when you look at this, look how clear you can see price here, right? Gets above here, held by the midline, deviates below, back above. Ultimately, when it gets conviction and it closes below these levels, it's typically seeking out the next form of liquidity. So as we look at this here, obviously price is in a bit of a state of weakness at the moment. So what does that mean? Well, quite simply, while we're holding this weekly fair value gap, I'm still looking for some kind of bullish reaction here. Does that mean that I expect the market to just go up from here and go to new all-time highs? Absolutely not. But look, think about it logically. People that have been, short selling this from up here and even down here are going to need key, clear and obvious liquidity targets to offload their positions back to the market. Yeah. So selling into here to find willing buyers down here. And this has been our target for quite some time, 56,697. And we're then looking for this gap to hold. So as we are at the moment, we're kind of caught up on the price action and on the the analysis that we've been doing for the last few weeks. So where do we go now? Well, that was obviously the magnet down to here. So what exists beyond this now? Well, quite simply, we've got this low here that we have to account for. Key liquidity resting below that low. Why? Let me just get rid of this. Why? Because look, we set this down here. Look at the long tail on this candle. So that means price tried to do this, right? Price tried to come all the way down to here, but ultimately was then forced back by buyers up to here. Now we almost kind of reclaimed this level here. Price came back up, but ultimately, as we say on our journey with price is looking to do one of two things. I'm going to hide the weekly fair value gap now as well, because we know that that's there. So price is either looking for liquidity above old highs, below old lows, or it's looking to rebalance a fair value gap. Right? That's the clearest and cleanest way to kind of look at the dynamics of the market. So as we're moving down here, we can see quite clearly, from our previous analysis, this was our key trigger point here, right? People started to get a little bit bullish here. We were into support. Now, for me, there were two very, very important gaps here, which I've just added to the chart. And what happened was the price came up and we were finding rejection here. I think the exact thing that I said in the Bitcoin report that week, as well as the Twitter posts and probably on the live show as well, was unless we close above these, then we still have to favor more downside here. And then on the close of this candle, it gave us a brilliant line in the sand. So I'm just going to do this fair value gap in green so it stands out from the others. Now, when we had this, we're saying, okay, well, you're in a point here whereby you're kind of between a bullish and a bearish a rock and a hard place almost, but between, bearish gaps here and a bullish gap had formed here. So the analysis was really nice and simple on a daily basis. That was, as long as we continue to hold this gap. So once prices come up, when we're delivering from one of these, a bearish gap, we have to be favoring bearish setups, or I certainly do. Close above it and then targeting these highs. That's simple, right? Now, when we form this bullish gap, we were saying, okay, this gave us an opportunity to kind of almost preempt potential strength that we might see in the market here. Now, we haven't had a market structure break, right? We haven't had a market structure shift here. We've come off of a lower low, we've set a lower high, and ultimately we were then looking for this to set the higher low and then for price to regain structure. So what this gave us the opportunity to do is to say, okay, well, while we're rejecting here, we have to still remain aligned with our high time frame bias, which is bearish, okay? But while we draw down into here and we're now delivering from a bullish gap, well, all of a sudden, if we held this, then I'd be looking for long setups, because I'm saying to myself, well, if these were strong enough to reject the market, and we'll just do these in red again, just so that it kind of makes it a bit more, makes it stand out a little bit more as to their nature. While we're rejecting these, we're expecting price to move further down. However, a rejection here followed by support here can be an early stage indication of strength. And look, if these really are very, very strong resistance and price is seeking liquidity lower, this low and this low being the key, then this shouldn't hold, right? If it did, and we got our kind of bullish setup, so we get price setting that low, this is on the lower time frame, sweeping that low, closing above the high and gaining that structure again, gives us the opportunity to be buyers in here. This would be on a lower time frame from within this point here. Then I would have looked for long setups happily. However, look what happened. Price came down, closed below. Then we said, okay, well, where's the next point of liquidity that price is reaching for? Well, the next clear and obvious swing low, which was here. Now, these lows, for me, always make really, really key pivot points or support and resistance flips. So I just want to draw this across to here, and I'm going to make this a little bit thicker. So why is this significant? Well, this low here, look at the wick. Just an abnormally long wick, meaning, again, there was buyers coming in there, absorption. So what has happened here, we've closed below this and we've done two things. The close of this candle, which then purged off even further, then left us this bearish gap, right? This bearish gap, we expect price when it's taken liquidity from a low, which is external, to come to internal liquidity, which is this gap. We also have this key pivot point here. And what I'm saying to myself with these is, well, if price can close back above this, really hold this gap here above the equilibrium, the 50%, then there could be an early indication of strength, in which case we can then, lessen our risk exposure, but we can start to take counter trade intraday long setups, okay? However, seeing this area act as strong resistance, which I think we can all accept, that it has here, encourages the fact that we're going to be looking for more downside. So again, keeping it very, very simple, what are we doing at the moment? Well, we are holding this bearish gap. Now, what's interesting here on a daily scale is we've come down and taken out an old low, this low here. So that, right, let's move that back, was our external liquidity. So now we expect price to come to internal liquidity. Well, now price has done that. The expectation is, again, so external to internal, internal back to external. Right? This is where the stops are resting. This makes the most sense to attack it lower. However, we have had a pretty significant drop here, and price at the moment is starting to make its way up. So while I'm still definitely wearing a bearish bias here, we have to, based on market structure, based on the state of delivery, getting back into this gap again is really kind of a little bit of a sign of strength from price. And I'm just going to draw these across here as relative equal highs, right? So we're going to take a look at that now as we drop down onto the 4 hour. So as we see these highs here, we can see price kind of gravitating back towards those. Now, what I find really interesting as we look at this on the 4 hour, and we've got about 46 minutes to find out, is that as price has come up here, so what have we done? We've set a low, lower high. Now we've got a higher low, right? So price has the opportunity here. So as we come down to here, set a high, higher low, a break of this high here, which is represented by the equal highs line, that I'll just do a bit thicker so it stands out again. That would be a break in market structure, okay? Now, the other thing that we can layer on here is our fair value gap inversion. So at the moment, that's a bearish gap there. We would expect that to hold if price was going to continue lower. So I would think this morning, as I stepped onto the charts, that price would come into this level here, right? Hold here, and then move down. That was what I would favor. Now, if it doesn't do that, if it closes above like it is at the moment, but we still have 45, almost 46 minutes to go until the close of this candle, then, close above as it is, this becomes a fair value gap inversion, meaning that we violated it, violating it, meaning that we've closed above it, meaning that if we can't find the order pairing in here to send price lower, the chances are it's looking for a higher price. Okay, that's the clearest and simplest way that I like to think about it. And these highs here, these relative equal highs, which again on a lower time frame will be clearer, but also on the higher time frame, provide a really, really key liquidity draw. So simple. Today, in terms of looking for any intraday traders in there, like myself, today I would be looking to favor long positions. Should we hold the close above here? I would then look for price to kind of pull back to an area here, get our sweep pattern, right? And then look for longs above. So take a high after sweeping the low. That's where we can get involved in terms of looking for long setups. Should price, however, retreat back within this gap, holding it as a bearish gap, then I'd definitely be favoring short setups into the higher time frame low, but also not forgetting about the current swing low here on the 4 hour as well. All right. So looking at that in that perspective, that's where we want to be. Now, just kind of zooming out on this, or actually what I might do is just go to a clean chart here. Let's go to our friends over at Binance. Just make sure we've got everything nice and clean. And let's just take a look at what BPro is telling us as well. Guys, if you have got any questions or there's anything you particularly want to take a look at, please do let me know. I want to kind of look a little bit more at the macro at the moment. I'm happy to also take a look at a few alts because I know obviously there's a lot of people out there hurting at the moment. So look, I want to put BPro on here as well. Okay, our in-house indicator. Now, the main thing that I use this for personally is keeping in with the trend. I find it very, very good for that. And also for divergences as well. But it's basically a standalone trading system. You can find out if you've got interest, and you can find out more in the description or just by popping over to visit the website. But this side of it is very, very simple to grasp, all right? As long as we are above the higher time frame trailer, this is the weekly, yeah? See the light grey line that we have coming in here, then we hold a bullish bias. So it did us great favors here when we found support here and then moved higher. Ultimately, it's worth noting this here is the start of the bearish trailer. Okay, that means that until we reclaim this level here, price actually is favoring short setups. So now if we look at this on the daily, we can see the similar thing here, catching these trends. So basically what you're trying to do is you align your high time frames. So you take the weekly. We know the weekly's been bullish all the way through till here. Yeah, so that's Friday. So that was, and then we've had the start of the new week come in. So basically what happened here is, we got the opportunity to, align all this move up here with a bullish bias on the high time frame, all of this move up here, stay out of all of this chop. Yeah, as we see the market sold off here. And ultimately, then we're out of the market until we get into this point here when obviously it's flipped and favoring short setups. So then we can make the most of this. So basically, you can just then overlay your basic TA principles and say, well, okay, if that's the situation here on the daily, quite simply, if I have a bearish bias as the market opens in here, then we start looking for ways that we can find bearish setups. Now, we've had a really, really big run of Asia's high here as well. I'm just going to pop this off now for a second onto the lower time frames. Hey, Jaspir, how you doing? Craigie boy as well. Thank you very much, mate. Like to keep things nice and simple if we can. Now, Asia's range plays a really, really key part in price action. I'm not going to really go into that too much today. It's much more for intraday traders, and I really do believe that, especially on a Monday, a lot of our wonderful patrons like yourselves that are watching today are much more interested in the macro view. So what does that mean here? It just means that while we come running into these key areas, the big red area here is saying, look, just be careful, remember that overall the market conditions are still bearish. Doesn't mean that you can't long into these, and I'm certainly not telling you or trying to tell you how to trade. But for me, I'm looking at this and thinking, right, while we're in this big area of rejection, you only have to look back. I know it's a lower time frame, but the key rejection points here, again here. And is this one here? Yeah. We did wonder if you might be napping actually, Erica, but it's good to get the confirmation. So now, again, it's really simple. You just want to see strength up and above this area. If not, don't let your emotions kind of rule the roost here. This is obviously still a bit bearish. Now, New York opening price was New York midnight, which we can see here by the very thin black line, aligned with the New York markets, right? When New York isn't trading, it's the biggest market in the world. Responsible for the highest amount of volume, volatility, etc. Henceforth, that's why we use these like kill zones, right? To find these areas where it can be most effective. Now, while we're looking at this here, New York midnight open here very often acts like a really good mean reversion tool. Yeah. So just to give you some examples, actually, let's just look back over the last few days. Yeah. And obviously weekends, it's a little bit less accurate. But look, we're very, very much above this now. So the chance that price has seen its rejection here, the end of London, and is looking to correct deeper is quite high. How deep? We don't know. But then that's the key thing, right? We have those parameters. While we hold these bullish gaps, we're probably holding that bias. The time to short this would have been up here when we've taken out key liquidity, all right? However, moving back here, we can see that we've got New York midnight opening price here as well. Look how price moves away from it. It just kind of draws back to it, even here where it wasn't successful, but again, on a Sunday, which is a little bit more difficult. Here we can see what happens. Price is below it, draws towards it here, and as it gets above it, it just starts to draw down. So we want to kind of take that into our analysis as well if we're looking at this on an intraday basis. So I'm going to stop the intraday analysis there, just purely because I think we want to kind of focus a bit more on the higher time frame today and say to ourselves, okay, do we have a plan? So let's start with a nice clean chart, right? And let's go back to the weekly and say to ourselves, all right, well, what's the story of price at the moment? Yeah, have we got any key support and resistance levels? Where is price looking to go? So when we're looking at this, we've already kind of established the idea around these kind of abnormal wicks, if you like this. So while price if price gets back above this, then I think that's a little bit of a sign of strength, right? Because look, if people are coming down here, if there's enough buyers here, this thing's going to go up. If the panic takes over the market and this really is moving lower, then, I wouldn't really expect us to come and close back above this level. As we said on the previous analysis as well, we've got this bullish gap here, which we'll do in green. So as we look at this on a weekly scale, it really isn't actually that bad, right? I know price is down a lot, but look, we're still trading to that 57,000. All right, it's always worth remembering the context behind that, okay? Now, moving to the daily again, we want that context. What do we want to see if we want higher prices? Well, I'm going to be aware of this fair value gap up here as well, and also the slightly thinner one there. However, this is the first kind of target that I want to see conquered, all right? I want to see price above that, holding above this, in which case then, yeah, I'm going to be aware of these gaps, but my expectation is for price to make a run towards this high, which is set at 63,861. Now, obviously, the caveat to that is we still need a daily close above here. So moving to the 4 hour, what's the plan of action for the day? Well, again, I know I sound like a broken record here, but this fair value gap here will tell us a lot. I think as long as we hold above this, then I can't see a reason why price wouldn't be seeking liquidity above these equal highs. However, what we wouldn't want to see is price kind of come and take out that liquidity, so wick up into it and then come back down into this, because then it would leave a little bit less clarity in that front. You want to see your liquidity targets untapped, so that if price is showing strength here, well, it's saying, look, if these red boxes, our bearish gaps, are designed to reprice, to get price to fill orders to send price lower, yeah, then while we hold that, the target is here. All right, which is 54,260, and then the swing low below that. However, close above this showing strength is saying, look, there's just not, think of it this way, it's not technically accurate. If you think of it in the way that there's just not the selling pressure in here, the sellers just aren't stepping in enough, well, price then needs to gravitate to the next key liquidity, and that is the equal highs resting here at 58,475. So let's take a look at ETH as well, shall we? Now, ETH was actually really, really, really beautifully clear up here, and you have to forgive some of the annotations and bits and pieces on here. Let me just kind of clear some of this up. Now, we want to start on the weekly, and this was really key for me. There we go, it looks a bit better. So, quite simply, we had this expansion higher. Now, remember, still forming and living by the same principles that price has taken external liquidity here from above this higher. Yeah, use that in red. And then on the close of this candle, created this big fair value gap. So I'm just going to do this in green again, so we stick with our kind of theory that, look, when price was holding this equilibrium, and look how perfectly it held, just the 50% of this impulse move higher, right, from this low to this high. Look how beautifully it held that level. To me, I was thinking, you know what, especially after this reaction here, we showed a lot of strength, buyers kind of stepped in here. And then on this one as well, I mean, it's not quite a pin bar here. It's a little bit more like a kind of doji, but it's definitely in favor of the buyers because, look, price tried to force its way all the way down there, took liquidity from the prior week's low, and then really got bought back up and literally held this level pretty much to the point. Now, we'll look at this again on the daily. We got more indications that this thing was heading lower on the daily, but we did say the key liquidity point coming down here, if we fail this, is this low. Now we've taken liquidity below this low. There are obviously a few more lows to consider, right? We've swept this low here as well. Let me just draw this one back as well. So we've taken liquidity below this low and this low. And there's even a third one down here, right, which we haven't taken out yet. Now, while price has kind of taken liquidity here, there's definitely an expectation for price to draw a little bit higher. However, we do need to be aware here that now we've closed below this. This becomes a weekly fair value gap inversion, meaning that we now expect this area here to hold as, you know, pretty strong resistance. So looking at the daily here, we can see again, look, what's price doing? We can see price drawing higher here towards this fair value gap. And I actually like this one here more than I do on Bitcoin, because the one on Bitcoin had already tapped its fair value gap and sold off. This one hasn't, right? This is a naked or an untapped FVG, meaning that as prices come up here, yeah, it showed a bit of weakness here and here, but again, weekend trading, it can be very, very difficult. Big sell-off on Sunday, get people bearish coming into the market on Monday, take out their leverage, and then, the market settles into what it's actually going to do. This we had on the chart previously as well. Let me change that to red as well. So, if you look at my charts, if you see anything that I do over at TBN, or if you see anything that I do on Twitter, for example, you'll see my fair value gaps as grey, whether they're bullish or bearish. But just for the sake of people maybe on here that aren't familiar with the concepts, I find it sometimes can be a bit clearer for people if we do the bullish ones in green and the bearish ones in red. Purple ones are inversions, meaning that we expected it to be bullish, it closed below it or above it. Inverting it, meaning we look at it in forms of a support and resistance flip. So where are we? Well, for me to really want to start getting involved here, I need to see this closed above. That would then violate it, return into an inversion. We could look for this to form and support a base for price to then build higher. So what else does that mean? Well, quite simply, when we revisit this and until we close above it, I will be favoring short setups from there down to here. Yeah. That, for me, they're the key liquidity clusters on the high time frame. We've taken these two now, but we haven't taken that. And we also have this one resting here and this one resting here. So in terms of what's drawing price higher at the moment, it's this daily bearish gap. It's drawing price towards it, rebalance it, and then the market's going to make a decision of, okay, are there more sellers here? Are there more buyers? If there's more sellers, then the liquidity targets to the downside become high probability. If there's more buyers, then we expect this to be violated, in which case we then look for liquidity targets higher up. So moving on to the 4 hour here, again, kind of seeing some similarities here with BTC, except with this one, we've had this bigger move up. And now, what I liked about ETH versus BTC on the daily is the opposite here, because I don't like this as much here on ETH on the 4 hour. The good thing about Bitcoin on the 4 hour one is it hadn't taken out that immediate high. Remember those equal highs that was drawing price up, where this one, we have a much thinner fair value gap here that price has kind of worked its way through quite strongly. It looks very unlikely that in the next kind of 30 minutes, price will sell off aggressively enough to be caught under this, especially kind of, an hour before the New York pre-market opens as well. However, what I'm a little bit cautious of here is we've got a failure swing here and a failure swing here. Okay, so that's where price comes down, sets a low, fails to take the liquidity. Very, very often, price comes back to take those. Okay, so that will definitely be in my thinking as well. The other thing that's in my thinking a little bit, kind of a little bit less concerned about this one because it's such a skinny gap here, but this is what's kind of holding price at the moment, and there's a slither of a gap above it here too. So I think for me, again, holding above this, ETH isn't really telling me a lot today. I think we really need to, in these kind of situations, your higher time frame is king. So I think if we get rid of those here, and then we're looking at it like this, kind of seems quite clear to me. It's like, okay, look, let's see what we do when we're in our key areas, our high probability areas. If price comes into this area here, yeah, to this box, and on the lower time frame, what we're looking for is for a high to be set, yeah, that high to be swept. You want to see a strong move down below it, showing you the conviction of the sellers, price to kind of pull back here and then to sell off lower down. All right. Now, doesn't, entry methods, bits and pieces like that. There's a lot of different ways that you can approach the market with this. For me, I like to see moves like this. So liquidity is induced, meaning people are caught offside. Those stops have all been cleared out, allowing people to fill their orders in the other direction. This is the true move of the market. This is the manipulation. This is the true move as price sells off aggressively. And then you look for those inefficiencies in order pairing, which are your gaps. and you say, okay, well, you can be a seller in here. Or, for example, you could find a breaker candle in here, or you could use this line either and be a seller here. You know where your risk is above that. Yeah, so you could set an order on there. You know your risk is above that stop loss, and then you've got your downside targets there. All right, that's the kind of thing. Just for those, I know a lot of you are still curious about how we would look to execute those types. Well, it's basically what we're doing on the high time frame, decanted down onto the low time frame, and then looked at that as a set of triggers. So again, just so that they're not discounted, I'm one of them as well. For example, right, an intraday trader for anybody that's in there. So this is very, very interesting point here, because we've just finished out the London session. We are miles above New York's midnight opening price. We've smashed through Asia's range with a huge move, huge displacement here. This is showing a lot of buying power stepping in, but I'm very, very cautious here, right? Very cautious here, because I just think, look, we've taken key liquidity above those highs. I still think price is drawing up towards this inefficiency up here, towards this fair value gap to rebalance it. But what we're saying to ourselves is, okay, if you're now looking to long up to that, if that's your target, what I'd be looking to do is this. I would say, okay, well, while we've got this bearish 15-minute gap here, we've got 13 minutes now. If price is to close above this, so we want to see a bullish close above this, then I'd look to get in some intraday long positions. We've got some key highs as well. More coffee than tea today. No, never the coffee, unfortunately. It really doesn't sit well with my ADHD, I don't think. Good day, Peter, as well. I didn't see you sneak in there, mate. Another day of madness in crypto, hey? Yeah, so look, just trying to get through some charts quickly. Guys, if you've got any you want me to take a quick look at, as our dear friend Nit alludes to here, Craig alludes to here as well, really kind of smashing through them today. So happy to take on a few requests because we've got through the information quickly. Sorin, very welcome, my friend. So look, these kind of concepts are typical technical analysis concepts. Okay, you can come and learn them with us over at the Bird Nest. You can find links to that in the description, where memberships start from free. A lot of my teaching was refined very heavily by ICT. I was part of his original core mentorship, and also a huge influence on me has been like Trader SC as well as Crypto Bird. People I don't think give Crypto Bird enough credit for just what an industry force he is. He's CMT, Chartered Market Level Technician 3, incredibly high level to achieve for anyone. But please do go on there. Also remember, if you go onto our YouTube channel, you can go onto the live trading shows, just under the live tab, and you'll be able to see all of my live shows going back. I normally cover these concepts quite well, but just to give you a very, very quick overview, like with anyone here that's interested as well, just using this again, it's applicable to all time frames, but price is typically moving in a search for liquidity, right? So what we're looking for here, and forget this box here at the moment, it just represents Asia's trading range, okay? What we're looking for here are these fair value gaps. So they're 3 candle patterns. So candle 1, candle 2, candle 3. Now, what you'll notice here is that there's a gap between the candle 1's lowest wick and candle 3's highest wick. Yeah. So what we do is you can just draw that in there. That becomes a bearish gap. These things tell us a lot, because basically what we're saying to ourselves here is, okay, when price comes down into this, when price comes into here, we're expecting this to reject, okay? Because basically think of this as an area that when sellers stepped in here, it was struggling to pair orders because it was much more in favor of sellers. So rather than when you look at an area of price action like this, what you can see here is the price action is balanced, right? We don't have any gaps here, right? The price goes up. Then all of a sudden you get to here and you get this gap here showing the sellers have really stepped in, and this gap here. Now, the key thing here is that when we get that change, this gap that forms here, we can see how much price kind of starts to reject here. And where does it then target? Well, quite simply, we're then targeting the next liquidity lower down, all right? So how we can use that to our advantage to work out trend changes is as price is coming down here and we're saying, okay, we expect price to trade lower. Okay, well, look, here's the first fair value gap that we have. What happens? Price closes above it. So what's our expectation? Price is seeking liquidity higher. Sellers just couldn't reject price enough here, so it needs to find another area to set itself from. So once that's gone, or actually change that for you so you can see it properly, that becomes a fair value gap inversion, meaning when you close above it, it should change from resistance to support. Now, we then draw it up into this area here, but realistically, by the time we get that, we're then targeting liquidity higher up in the form of this high. Now, we're aware of this, so we can trade it from here into here, secure our stops in case we do reject here. If we see a rejection in here, then we can trade it lower. Ultimately, what happens? Price closes above here, inverts this, and then we're saying to ourselves, okay, well, how has price closed through it? Yeah, and then look at this strong full-bodied close. So we're now saying, well, look, we're delivering from bearish order flow. So what do we want to do? Well, then we need to look higher again and say, okay, where's the clear and obvious high? There's one here, but I would say this one here kind of really stands out. And again, you can see with these key highs and lows, price closes above it quite strong here, and actually price has found support at this level here as well. Now, that is a very, very quick overview. I appreciate, mate. Hopefully it kind of gives you a little bit of an insight in what we're looking for. But like I say, please do go back, check out the YouTube channel, or come and grab yourself a free membership over at TBM. I've got a full course on there explaining exactly how I use them, but always credit to the originator of the information. There's not really much original content when it comes to trading strategies and triggers and that, in truth, but those that teach it very well. I learned this from Michael in my early days and refined incredibly heavily by a trader SZ. So that's what I would be looking at here. So just really, really simplifying that down even more, what does that all mean? Well, quite simply, we're in a bullish state of delivery here on the 15-minute. Remember, time frame is very, very key. We believe that there's a high time frame draw above us, right, in the form of this daily fair value gap. So price has taken external liquidity here. It's now coming up to rebalance this to make an efficient market. Then the market can decide which way it's going to go from here. Does it continue to sell off? Does it need lower prices? You know, people forget very quickly this is a case of supply and demand, right? You know, if people want Bitcoin enough, if the big institutions, all these major players, the ETF, all the stuff that people wanted to see come into the space, you know, if they want this enough, and there's enough people that consider this, you know, what, say on ETH here, for example, 3,041, there's enough people that consider this a value bid here, then price will go up because supply and demand, right? Too many people want to buy it. There's not enough for sale at that price. Price will then get to another key area and ask the market that same question, right? Supply and demand. You know, are there enough buyers at this price? If they are, we violate this, inverting it, and then we move higher to find willing buyers at higher prices. But at the same time, if you're short this market, you're looking to sell your coins back to people at a lower price. It's then a case of kind of putting parameters in place to really work out where those prices and places are. One moment, I'm just going to take a sip of what I'd imagine as a pretty lukewarm tea. Yes, it was. Okay, however, what have we got here from Peter? So the only coin is doing okay is Mantra OM after the great news of a huge real estate company partners. Nice. So again, good way to trade this. Find a fundamental narrative or a news-based narrative and then kind of align that with a coin. So let's have a look. So Mantra. Or was it? Oh, you said OM, didn't you? USD. So is it this one, Peter? Let me know if it is, because I've got Matter. Or maybe it's this, Matra, is it? Matra Realty, possibly, if it's a stock, or maybe this one. I see that you put OM there as well. Let's take a quick look at this anyway, mate, while you just let me know in the chat. And let's see where we are. So overlaying the same principles again, we always want to make sure that we do that. What has price done? Whenever I see kind of like relative equal lows like this, by the way, it always gets me excited because, and you'll start to be able to spot these like in your sleep. Yeah. So equal low, equal low, equal low. These provide great liquidity pools. All right. So is it this one, mate? OMUSD? I'll crack on with this one, Peter, then. Yeah, if someone can just let me know the ticker for it. Doesn't hurt to do the TA on this one while we find out, or just let me know if I am on the right one. So again, really, really simple, right? What happened here? Let's look at the most recent. There's our high, yeah? So what's happened here? Price has taken out this high, do that in red so it kind of stands out. So then what's our theory here? Price has taken external liquidity, so price is going to return to internal liquidity, right? So that's this fair value gap here. Perfect. So actually it did this quite nicely. Price came up, internal liquidity here, which is reacting at. Now we're driving higher. So what's the next high target? Is this swing high here at 1.095313. Okay. Now we do have something to be aware of over here. Now, when we're in a buy program, we don't worry as much. It is the one. Awesome, Peter. Thank you. When we're in a buy program, we don't worry as much about what's on this side. Yeah. So look, we're in a sell program here. What happens? Price is just being completely respecting any bearish gaps. Big bearish gap made, price sells off into here. Bearish gap made again. Didn't get retested, but sold off. What happened? Bearish gap here. All right. A bearish gap here. So what happens? Price comes down and then comes back into this, finds a rejection here. So what do? We're delivering from internal liquidity. I know I sound like a broken record, but we're now targeting external liquidity in the form of this low. Yeah, it doesn't quite come down to take these equal lows there. I don't think anyway. Oh, it did. It did actually. Look at the sneaky little beast. Right, that's beautiful because actually, you know, they're key liquidity pools. So we then even more so expect price to have a reaction to the upside. So interestingly, remember what we've said before. Until this candle closed above here, this was a bearish gap. As soon as that candle closes above it, it turns into a bullish gap. An inversion gap, meaning that we're then saying, okay, well, if that's showing strength to the upside, what do we then look for? Well, quite simply, we then look for price to have taken the high, which it's done here, so taken external liquidity. Where do we expect it to draw to? Down to our bullish fair value gap here, which is in green, and then make a move higher. All right. Now, what did it do again? It's taken external liquidity in the form of this high. We've created these gaps down here. Price comes down to the lower of the two. Yeah. Now, we don't know. Price could have found support up here, but when price closed through that here, then you know, okay, well, if price closes below this one, which it didn't, we can see it wicked down, but it didn't close below, then quite simply we can say to ourselves here, if it closed below here, we expect price to attack this low and then this low. But look how it held really well here. And again, while we're delivering from these bullish gaps, we want to really be aware of that, right? Because a lot of people will start to panic and start to sell into this. Yeah, we had a big sell-off down here on Thursday. But then ultimately, the market likes to kind of play these liquidity games. And I think a lot of people were then thinking, okay, let's get super bearish. Lots of people kind of FOMO'd in short along here, right? What does the market do? Reverses and then takes all of those people out. Okay, so look, while we're delivering from this, key, but actually I've got my eye on this at the moment because this is what's known as a balanced price range. It means that, look, we had a bullish gap here that was violated, so it then becomes an inversion. However, upon that inversion, we formed a bearish gap as well here. So the crossover between the two, you take the smallest part of either, draw that across, and this is our balanced price range here. So I think now that this is where price is drawing towards. So, you know, we would want to have been long this market this morning. All right, and then moving on to our 4 hour, which is our next time frame, we can see as we come into the day here, this was 5 o'clock, this was 9 o'clock. We see we get a pump straight off the open. Does the 4 hour tell us anything else here? Not really. We've got such a clear daily gap here. At the end of the day, we can see price drawing down here that's still holding this. So we would then look to kind of more towards our execution time frame. And again, remember what I said here, yeah? Very, very simple patterns to remember. You're looking for price to induce liquidity, meaning that you're looking for a low to be run, especially when they're equal lows like this. So remember the pattern that we drew? Obviously, it would be the opposite for a short setup, but for a long, we want to see us reacting, first of all, from a higher time frame bullish gap, yeah, or sweeping a higher time frame low, because we know that liquidity has been induced. But then on our execution time frame, in this case, we're using a 15, we want to see a low, same as this, sweat. Then you want to see price have a strong recovery through it here, taking out this high that swept the low, price return down and then move higher. Yeah, so everybody remember, we just literally covered this a few moments ago on the show, and we cover it pretty much every week just as a kind of key principle. So that's what we're looking for, right? And then the long position looks something like this. You look for price to return to this line. You've got clear invalidation below this low, and then you're targeting higher prices in the form, in this case, of this purple box, which is our balanced price range. So how does this look in real terms, right? How does this look as an actual execution? So we already have our bias. We've come to the charts. We're holding this big, beautiful green box, which tells us that we should only really be considering long setups until we violate this to the downside. So do we get our sweep of liquidity on the low? We absolutely do. Where's the higher that swept the low? It's here. Right, and look how pivotal this becomes, because this area here, this is the move to catch people offside. This is the manipulation. This is the expansion. This is the retracement. And you know what? So often, if you look at this price leg here as well, yeah, you will notice the price draws down here into the golden pocket, or certainly just below the 50%. And then this is where you're looking to be a buyer. I used to have a system, you can see it's still on here, where we call this the breaker line. Kind of aligns with the top of the breaker candle, which is this. You see them on orange on my chart, right? So that's the up candle before the manipulation. This area should act as resistance. Again, when it's violated above, you know, you can pop a limit order on the top of this, tag yourself in, and then you've ultimately got, you know, your risk down below here. So that would have been the play for this morning. You know, unfortunately, obviously that has kind of already played out. So for me now, I'm kind of sitting here and saying to myself, well, now I want to see what price does when it gets to here. Yeah, because we need to remember that if we're expecting this as an area of rejection, once again, if we see the opposite of this, yeah, so we see price coming to our high time frame level, sweeper higher, strong breakdown below that, right? And then in the same way that we would look to that area to go long, we're looking for the inducement here, and then for the breakdown here. And once again, we can carry that line along, and that, you know, allows us to take our short setups to the downside. All right. So that's what I'm looking for there. And the reason for that is because as we're looking over here, we're always taking into account our high time frame bias. And the good thing here, and it is a really, really good spot here as well. So I think it was Peter, wasn't it, that asked for this one? Yeah, I think it's a good spot because this does look pretty strong at the moment on a daily basis, even from a market structure perspective, right? You've got higher high, higher low, higher high, okay, lower low. We've now recovered a higher high. You know, setting this as the low here, if we form tomorrow's candle there and close that, then, you know, we're fully bullish market structure here still as well. Just want to pop back to the weekly just for a minute too, because there's something quite important here, I think. Yeah, which is this gap. All right, so two important things actually. One, in fact, let's just hide this all for a moment. All right, just so we've got a clean chart here. Now, this is important here, okay, because there's two things. One, this was the bearish gap we expected to reject price if it was going to. What happened? Last week we closed above it. That's bullish. So where's our target? This high, all right, which I think could be the all-time high, in fact, possibly, at 1.095313. Now, that's on a weekly scale. The other thing, as I just talked about you a moment ago, is looking at this. And what is this? So this overlays that. So you get rid of that one. And this is our balanced price range. Yeah. So what we were saying here is, okay, look, bullish gap closed through with a bearish gap. That's now been closed above as well. We overlay that with the fact that there's an inversion between this bearish gap. This really is showing strength here. So not surprised to see this kind of making waves higher. And again, on a weekly scale, 1.095313 is the key kind of level to look at. Now, looking at this here, and saying to ourselves, all right, well, if price is going to look to target that, what do we want to see here? Well, actually, quite tricky. We've had this kind of big expansion today. But actually, as we look at this on the 4 hour, all of this price action is very balanced. So I'm then going to look to move down to now going to look to move down into the 50 the hourly, sorry, before the 15 minute, and say, okay, again, broken record, but we can see how well, you know, that gave us an early indication, kind of came then back down below and violated this. But the moment we get back above this, we can see the strength, retest of this area, price ultimately finds the buyers. So where can we look to get involved in this? Well, in 11 minutes, this closes. If it closes and we leave a bullish gap here, then quite simply, we've got a really key plan. Price returns to this, we favor long setups higher. If it closes below it, we look for price to reject it and then sell off lower. Right, that's very much how I would be looking at that. You can finesse it more on the 15 minute, but I think ultimately the hourly leaves us something really nice and clear there. All right. So thank you, Peter. That's brilliant. And sorry, little question here. Is it the same thing like a stacked imbalance based on order flow? So what, in terms of the fair value gaps? I'm not sure exactly what you mean there, mate. So I think I don't want to kind of give you a misleading answer, but if you were talking about it in terms of looking at the gaps, the best way that I would think about it is, just get rid of that for a moment, is when you see these bearish gaps here, yeah, like this one, if you violate these and close above them, you want a clear liquidity target next to it, in which case you then look to target that. So this was a good example because unfortunately what happened here was price violated this gap. Yeah, so we would have expected this to be bearish when price came down here and set this gap. So we'd look for rejection here. We didn't get it. It closed above and it did move high, but unfortunately it had already taken the key liquidity before that candle had closed. So that would be a bit of a risky one. However, if we look at this one here, all right, this is a really good example. So that's a bullish gap here. So price coming down into this area. See how we initially got support? Well, that was a great intraday long there, right? You know, look at the kind of, I'm not saying you would long the bottom, but to the top, it's almost a 10% trade there if you caught that right. So the bullish gap did its job. Came back down to here. See how it closed below? Then that says, but how it didn't take out immediate liquidity, that's then when we want to target that. As soon as we get the close below, it then becomes an inversion, all right? Again, if you then come back to this area here and you show strength above it, then that's fine. But what I would also say is make sure you look for recency here. And what the key player here was this bearish gap. Again, what happened? We didn't get the rejection here. So where does price naturally then gravitate to? The next key liquidity. And actually, when you see price again displace above these, gives you an indication that it's still looking higher, all right? And that's what we get here. Again, displaced above it, but then look how it comes back down to this area. If you'd been longing this here in the same way you'd long that, and you were wrong, no problem. But you closed below it here, yeah, again showing weakness. So basically, you can then say, well, we've taken external liquidity here. We're now back below this line. Why would price want to do that? If the buyers are really stepping in here, you notice with structure how you get these big expansions, buyers step in, big expansions, buyers step in, big expansions. Well, if all of a sudden you look at that here and you say, okay, well, the expansion was here, price has kind of come back down below this key level here. Chances are it's just trying to look for some liquidity, some further support lower down, all right? So it's always good to kind of give yourself those parameters. All right, guys, look, we're going to call it a day there, a bit longer than I wanted to do it today, actually, but thank you all for sticking with it. I think we had about 2,500, 3,000 people with us live today, which is awesome. You know, please don't hesitate to get in touch with your questions. You can reach out to me at BC_Richfield on Twitter. You can also find me and my amazing team of analysts over at the Bird Nest. You can find the description down there for that as well. Okay, so we're going to be back on Wednesday with our Alt Request Wednesday for any of the crew over at TB, and the live trading sessions will take place again tomorrow. I think we're about 32 are up so far in the last 3 months. So we'll be getting our scalping hats back on and be back at the charts there. Sorin, you are very welcome. Gio, my friend, of course, always. Nit as well. Peter, everybody else that was on here today. Our lovely Erica, Craigie Boy was on here earlier too as well. Just Pitt, Raphael, Willius, who I think snuck in at the beginning as well. And obviously all of you that take the time out to kind of listen to this are all very, very much appreciated. So have a fantastic week ahead. Closing thoughts for you as well are on this, which are our red folder news events for the week. Okay, so hey Whack, how you doing? An hour late, no worries, buddy. Let me know if you've got any questions. So red folder news this week. These news events have big impacts on the market, so be aware. On Tuesday we have our good friend Powell taking the Fed chairperson. Okay, so whenever Fed Chair Powell takes the mic, then you want to pay attention because the markets certainly do. We then have another we then have him testifying again on Wednesday at the same time. It's 3 p.m. my time, which will be 2 p.m. UTC. Thursday is our big day for news here. We have core CPI, we have CPI year on year, month on month, and unemployment claims. All right, so I do expect to see a big injection of volatility into the market. And then Friday, okay, we have core PPI month on month, core PPI month on month. And then we are looking at prelim UOM consumer sentiment. Got a big news-driven week this week. And, you know, keep an eye on traditional markets as well, because we face today looking at the dollar index, which is a little bit up, okay, showing strength in the dollar. Again, a little bit of a move away from risk. But equity markets, you know, indices like the S&P 500 and the NASDAQ are holding well too. So, you know, while there's strength in those, I think there's every chance for Bitcoin and crypto to have a bit of a resurgency. Ultimately, you know, without being too cynical here, I have felt for a long time now, as we've discussed, that as Bitcoin has just been really kind of rallying so high, it was around its all-time high during the time of the halving. Yeah, I think, you know, institutions, it's very risky for major players to step in, unless you're Michael Saylor, of course, when, you know, these assets are at their all-time high. much better to wait for a market to calm down, for there to be that corrective move down, or to really try and manipulate that move down. And then, from there, you get the asset at a much more attractive cost that you can hold on your balance sheet for a lot longer. All right. And yes, Whack, I hope everything's going well, mate. Don't you worry about that until you get yourself back aligned. I'll catch you legends around the nest later on. All right, guys, have a fantastic week. I'll catch most of you again on Wednesday for our alt request show. And again, trade safe.